We're looking at the happenings in the economy from over the past 2 days. Now, the MPC meeting was held on the 21st and the 22nd of July, and the results are out. Now, in case you're wondering what has happened so far, CBN has decided to hold the interest rate at 27.5% for the 7th straight time. And what does this mean for us? But some key parameters, just to give you a brief overview. We don't have enough so much time this morning. So they retain the MPR at 50%, maintain a symmetric corridor around the MPR at plus 500 minus 100 basis points, retain cash reserve ratio for deposit money banks, DNB, at 50%, and merchant banks rather at 16%. They kept the liquidity ratio unchanged at 30%, but interest rate still remains at 27.5% for us. Now, joining me in the studio to further converse and get a feel of what's happening is Victor Uzo. He's an economic development strategist. Good morning. Thank you for joining us on the program this morning.
Good morning, Chiamaka. It's my pleasure to be here.
Now, they've done it again. They've maintained this again. Is this a good thing for us?
Okay, thank you. Yeah, there are two ways to look at this from the business angle. Well, because if you look at today, the inflation rate is on 22.2%. So you look at it, if they don't retain that, this is more like an artificial way of sustaining the inflation. If they don't retain that, what happens is that international investors and people that bring money to the nation, Nigeria will not be attractive to bring for investment. All right, but the other end of it, you may just look at it from the business side. So Nigeria is SME dominated. We have almost 40 million SMEs in Nigeria, which employ over 90% of Nigerians when it comes to employment. Or they are the people that look for these loans and these facilities to drive their business. Looking at the GDP, contribution of GDP for Q1 2025, you can see the likes of crop production, trades and real estate were the major contributor to Q1 GDP that made it to grew up to 3.1%. So if you're looking at the key players, you could see the factors or the indicators driving the GDP are also the ones looking for the funds. So what that means from the business angle, there won't be much funds to throw around within the sector, so to affect the job creation and all of that. But for sustainability and from the policy angle of the government, they also want to sustain that, because if they reduce, because there is a research out there, a report out there, a survey done by some certain level of people that said over 60% of people want the MPR to be reduced.
Yes.
So if that happens, what happens is that there is a tendency there will be a demand, and the demand and the normal demand and supply law, right? There will be demand on the economy that will lead to high inflation again. So government, they are taking the measure to sustain or even reduce the current inflation rate. But what happens to that is not going to be so sustainable on the two arm. Yes, government is doing, they are making their efforts to sustain that, while they are also the business side, the business of like the entrepreneurs and the SMEs that we support in the ecosystem. They are looking for funds to scale. They are looking, like agriculture is time-based. People are looking for money to farm and all of that.
Yes.
People that trade, they are looking for money to, maybe to import, because we are also import dependent. There are a lot of factors around inflation. MPC committee and MPR is one of those indicators. But if you're looking at it from the organic aspect, there are other structural efforts. Okay, let me give you an example. We have seen that crop or agriculture is one of the key drivers of the GDP.
Yes.
The cost of borrowing money is high. Government can be at the state level, at the federal government level, create an incentives where people that are playing in these sectors, targeted incentive, can now have access to funding at a particular, right? So if you're doing something in the agri space, instead of you maybe to go get funding at the commercial rate of 35%, you can get something within. Because from the business angle, people will not want to throw money into an economy that where your return on investment is less than the inflation. Let me give you an example. So maybe last year, you had, in 2024, you had 1 million in your account. As of today, you will have less than 800,000 because the inflation rate is 22.2%.
Okay, so let's pause there and just look at it. That statement you made. I want you to explain it in context. Now, when you say 800 and something thousand in your account,
Less than 800,000. Yeah.
are you saying that that's what I'm going to see when I open my account, or that the value of the money, although it's 1 million, is now less than 800,000 naira?
Yeah. So what that means that there was what they call the future value for money and the present value for money.
Okay.
So what that means now, the present value for the money is less than, though you have 1 million cash.
You're seeing 1 million.
You're seeing 1 million, but what you can be able to purchase because of the inflation rate will be equivalent to 7 or something thousand.
Okay.
Because inflation rate is 22.2%. So let me give you another scenario where somebody decided to lend someone money. Right, you lend somebody a million naira, and the person, you're not going to get interest. You're not going to be telling the person to give you 15% interest because inflation rate is 22. So it's not a good business for the person. The person will rather tell you, or the investor will rather tell you, okay, you have to give me something maybe at the interest rate or above the interest rate. So that's why the MPR now is at 27.5. What that means, this is the percentage most of the funders, even the commercial banks, can get money from the CBN. Right.
So basically, at this rate, you won't lose your money. You'll still get an interest.
Yes, all things being equal, if the inflation rate remains at 22%, at this rate, you will have value for your money.
Okay. All right. Now, you mentioned a few things about agriculture. How does this high interest rate, although you've already talked about it, how is it affecting this real sector? Because you mentioned these are the people that actually had the impact. Manufacturing was one of our major people for our first quarter, and even maybe last year. And now agriculture is coming on stream. These high interest rates now, their impacts, one, how does it affect these people? And how can what fiscal policies can the CBN go hand in hand to see that these things, work out? Well, you've given us an example for agriculture about giving some sort of incentive for agriculture. In other aspects, the SMEs too, they are one of our major drivers of GDP in this country.
So you see what happened is that for majorly the practical ways, like they said, in politics or in political science, political economy, where politics and economy intersect. Right. So if you look at these sectors, they are dependent on external funds or other people's money to fund their businesses. So now that we have identified the key drivers of our economy, the likes of agriculture, crop production, real estate, manufacturing. So though we don't want to allow demand and supply to determine what happens to the inflation rate, the other way, more practical way coming from the government now is to create these incentives that we support what I could call star sectors or star industries that is supporting what is happening in the economy. Because if we leave it at this high rate without creating an incentive, you will find that most of these SMEs, that is also the larger employer of labor in Nigeria, will be having issues around retaining their employees. So you start having issues around people, unemployment, leaving their stuff, getting issues around, we can't be able to, pay people at this particular rate and all of that. Yes, what the CBN is doing is one of the good strategies to sustain the inflation or subdue inflation. However, on a long term, there is need to create incentives around these key sectors, like agriculture, the manufacturing, the trading space and real estate space, to ensure that these, although there is a benchmark for lending, but there are other incentives for people operating within a particular sector. Yeah, the good thing, we could see over 96% of the GDP, contribution to the GDP came from non-oil revenue, which is a good win because we have always been trying to diversify the economy. Right. So what do we, since we have seen the key drivers, what are we doing for the contributors of the non-oil revenue to ensure that while from the government or policy angle, we are trying to subdue the inflation rate, the businesses are not also suffering from, having access, for funds to do business.
Okay, we're going to have to move away from the whole CBN MPR rates now from our topic, you said that we have to do the GDP rebasing. It's been on the conversation in recent times. And in case you're wondering, the Nigeria's public to debt GDP ratio has dropped to 39.4% in Q1 of 2025. Now, the NBS has rebased, just same way they had the CPI rebasing that changed a lot of things recently, and even the employment and something sometime last year, some metrics have been changed. They've done that to the GDP now and have put the year from 2010 to 2018, and so therefore our debt to GDP ratio has dropped to 39.4% in Q1 of 2025. Now, how does this rebased debt to GDP ratio, what does it create? Because some people feel it creates some sort of false comfort for the Nigerian economic health. Is that the case?
So the good thing about the rebasing, it's just happening because we were from the business angle. So there's what they call the debt to asset ratio, right? So what that means now, that's what led to debt to GDP ratio to drop, to that's having a positive sign. What that means, Nigeria will look more attractive, because what that shows that we now have more money, unlike what we had with the rebasing of 2010. Right? So it's not that in real time, in nominal GDP, there still needs to be some policy around because people want to see we are looking good on paper now. Mm-hmm. People want to see the real impact. So that has to go with that's what they call in public policy the substantial policy and procedural policies. So it's not just only CBN, it's going to not only the federal government, but at the state level where these businesses happen in Lagos, in different states where people farm. So what is the state government doing to ensure that, okay, now Nigeria is looking attractive based on the new rebasing activity that just happened? So how do people feel it on the ground? Because it's somebody going to the market want to see that not just Nigerian is having a positive outlook. How does it affect them? So that has to do with some, not only substantial policies, procedural policies, from not only from the federal government level down to the state and local government level, where people have to feel this new outlook that Nigeria is having. It's a good one. Internationally, it's putting out on a good note. That's for me. Thank you. Okay,
so now last question, because time is not our friend. How can fiscal discipline, be enforced even with this new debt headroom?
So you mean do you mean from the government perspective or from the business perspective?
Both sides, because in Nigeria, government actually basically rules everything. The businesses have to now are responding to government policies. If we're going to take a look at that, really.
So for me, the best way to go about this is to do more of some stakeholder engagement. Make sure whenever you're coming out with any form of policy that affects not just the citizens, that affect the business, so there should be some form of roundtable discussions where you have the feel of what individual players at different, individual stakeholders at different levels call more targeted stakeholder engagement, where people come in, you have a feel of what is happening in real time, in the economy. So that whenever these policies or these fiscal policies comes out, it's not going to be a show of people reacting or a shocker or to the key players.
All right. Thank you so much, Victor, also for joining us this morning. He's been talking to us about the MPC rates, although it's been retained, and of course the GDP rebasing. Our time is not very much our friend this morning, so we have to wrap up the show at this time. But thank you for joining us on the program this morning. For more of our news, programs, documentaries, do well through us on our social media platforms and on our YouTube live stream. I've been your host this morning, Chiamaka Enendu. Same time, same place tomorrow. Bye for now.